Hello, trading is closed on December 27th, 2018. Had a target for today down around 70 points or so of 2404.85, and that printed. During the day, MEJT gave an ultimate sell signal. We got the minimum. Usually we get more. Also, you have a sell signal here that worked. Now, I try to plan my trades in advance. I don't know of any way to plan for a 70-point drop and a 90-point recovery, and that makes any prediction pretty tough. So all I'm going to say is, in addition to the wall into the close, which is usually met by gapping down, we have a lot of Fibonacci resistance right at the close. It's not hard to count 5 waves up, and if that's wave 3, wave 5 is 38.2%. It's also a Fibonacci target of the prior consolidation. If you measure from the price of the FOMC announcement to the low, it's right at 61.8%. So even though futures are up now, it's at least a reasonable chance we gap down tomorrow. Now, this pattern, despite its appearance, is the one with the early high. This one has the early high. Tomorrow's pattern is the one with the early low, as is Monday's. Just because the pattern has an early low doesn't mean you won't gap up first. But because of the 5 waves and the fib resistance, at least I think we should start lower. We're still, it's not the one I want. We're still thinking we completed the ABC down. We have a ways to go up. I don't know how high. So any short position in the market with moves like this has to be watched very carefully, or else you can get killed. How high we'll go, I don't know, but I suspect we'll go over the price of the FOMC announcement. Now, typically we go over it by the amount greater than we went under it. To put us over 2,900, I don't think that's going to happen. But how high over this, I don't know. Now, as good as this target price was, that's how disillusioned I become with my attempt to come up with a timing system. Now, I had the 28th, and there's a 2-day tolerance, so you could say it called the 26th. It really wasn't bad, but it just isn't as accurate as I would like. It isn't as helpful as I would like. I'm going to see what happens with these numbers in January. If it doesn't deliver the goods, I'm just going to drop the whole idea. Been trying it for a year. Worked pretty well retrospectively, but you can always come up with a system that works retrospectively. So for tomorrow, we have the pattern with the early low. Reasonable chance of gapping down, but we've just completed a wave down. We're in the middle of a wave up with appreciably higher targets, and anyone attempting to play these markets has to keep a very tight stop, or else you get your head handed to you. And that's today's call.